Hi, this is Yahoo. I'm a option trader. Today is December 19, 2025. The time here in Japan is 8:33 a.m. Let's take a look at the market again today. Starting with Japan. The Nikkei closed yesterday at 49200 yen, down a little over 1% from the previous day. Momentum is clearly getting weaker. We are slightly on the negative side now. The market feels tired. Volatility, however, is calming down, and the volatility index is at 27.97. And honestly, I would not be surprised if we move into the 25 range soon. As I've said before, this market still looks like a range-bound market to me. At high levels, we are not seeing a big rush, but rather a slow process where accumulated unrealized profits are being warmed down by time. PER is 18.69, and the Nikkei EPS is 2621 yen. EPS has been very strong recently, peaking around 2680 to 2690 yen. But we started to drift lower. It feels like the market has now priced in the 2600 level, at least for the moment. Although I still see the Nikkei moving back at forcing 49000 to 52000 yen range. Today is December 19, and we have the Bank of Japan's policy meeting and the late decision. And there has been some media talk about the rate hike, but the key question is the size and the tone. Is it stronger and expected hike, a hike that's already pricing, or even no hike at all? My view is that the market has already discounted a rate hike to some extent, so I don't expect a dramatic reaction from this meeting alone. Looking at individual stocks and names that led Nikkei higher earlier this year are starting to weaken. At the same time, we are seeing a relatively strong moves in the domestically oriented stock, especially growth names and is solid profitability. In 2025, and the market has clearly driven by semiconductors and AI-related stocks. But heading into 2026, it feels like the focus may gradually shift from external demand to domestic demand. As the index cool off and how previously ignored stock being to move will be very important to watch. On the policy side, there's also progress on realizing that 103 million yen income self-hold, high dis- disposable income is generally positive for equities, but it also raises physical concerns which likely means more physical-driven policies going forward. On the bond side, the 30-year Japan's government bond yield is around 3.36%. At this level, I personally don't find it attractive. What really matters is the yen. Inflation remains the key issue, and how far the yen stretching after the BOJ decision is something I'm watching closely. The yen rate is around 155 yen right now. Moving to the US stock market, S&P is at 6775. The VIX is down to 16.87. Volatility is very calm, but just like Japan, momentum has turned slightly negative. It no longer feels like a market where the index itself is strong. Gold, on the other hand, is firm. It's trading around $4,332. GBP is at 1.31, so nothing extreme there. Bitcoin briefly returned to the 90,000 range, but it has fallen back to around 58,000. For now, it's hard to say that clear recovery is underway, although major indices and large cap leaders are weakening, while the money is rotating into the other area of the market. That's why I think it's important now to think ahead about What comes after this range-bound phase? There's still a lot of unrealized profit in the system, and there's no obvious trigger yet for major move. It's also year-end. Market participation is tuning out, and many investors stepping aside. Because of that, I don't expect dramatic move in the very near time. Cash markets will close for the holidays, but CFD will continue trading, so keep that in mind. For now, I'm watching the BOJ decision and letting time do its work as the unrealized profit gradually fade. This feels like a parallel to stay patient and prepare for what's next. That's all for today. If you enjoyed this, please follow my contents. Long good. I'll be back tomorrow. See you.